And we are live. I am Cate Luzio, founder and CEO of Luminary, and this is Goaldigger on LinkedIn Live. And I am very excited to welcome not only a Luminary member, but also just a badass woman in business, doing it, making it happen, creating her own path after a very long path elsewhere, Molly Falig. So welcome, Molly.
Thank
Love
you, Kate.
all right. So I always ask this first question to all of our guests on Goaldigger is tell us about your story. Like what led you to where you are today in creating actually the multiple businesses that you're now running?
Well, thank you. I've been looking forward to this chat all week. Kate and I are both kind of super busy doing our own thing, ships in the night. We see each other a lot at Luminary. So I was like, yay, we get to, we get
Yeah,
to
talk.
we mark it on our calendars. Exactly. And we didn't plan the animal print.
No, I love it.
It just happens, like the universe. So I'm super excited to be here. And thank you for that intro. So I like Kate, I call myself I don't know if you call yourself this, but same career path. And since I was in investment banking for almost 15 years in the capital markets, so on the trading floor, I was in a COO role covering debt trading during all the fun. I was there 04 to 2016 doing debt. So all the fun kind of Big Short type stuff that went on, the FX rate credit, derivative spot and structured trading. So all that fun stuff. And I think that it was a evolution of my career. When you start out, it was fun times before the crisis, right? Yep. In the sense that, as you know very well, all about innovation, and my role as a COO was all about, new products, new clients, new platforms, and really supporting the growth. And I covered emerging markets. And so I even got a chance to go down and run our Chile office for a year and 9 months. It was really where I say I caught the bug for the startup, because it was a 75-person office. But we had like 4 FX traders and like 6 derivatives traders and like 1 M&A banker and like 1 asset manager. So I was responsible. Lean team, but it was still a full bank, broker dealer, and SPV, and I was responsible for running the businesses as a business manager. And then I had all the back office report into me. But I just remember, you could walk around the floor and have those instances where you had a regulatory capital deficiency, and you had to get a loan and convert it from pesos to dollars and go to ops and have the wire go out, and like things like that you would never see when exactly, like sitting in a bank with 5,000 people in New York. Like, you're not going to see all that happen. And so I got a huge appreciation for what it is to lead small, kind of like the startup world, right? Yeah. And kind of have that. It's by no means easier, because you just have full front to back responsibility, right? But I loved it. I didn't do much. People are like, well, did you, how was Patagonia? How was all that? I'm like, I didn't do much besides work for a year and 9 months, but we turned the office around, second best revenues in 50-year office history, cut cost. So I came back, and then, times had changed, and I was doing a lot of reg remediation. And so in 2016, I decided I was gonna go out to the West Coast, where all my family is, in the Bay Area, and I worked for a fintech, peer-to-peer lending in between Series C and D, and I learned a lot about what it's like to work for a venture-backed company, especially in a late stage, like right before you're going public. And I didn't necessarily love that, but I did. So I ended up going back to banking. So I left banking twice.
Wait. So why didn't you love it? Because I think you gotta tell why, like, everyone wants to work for like all these crazy startups that are like growing like gangbusters.
Yeah, exactly. I think what I realized is that I specifically, I think it was because I was doing 2 things when I was there, right? I was working for in kind of a just getting us to the edge in terms of like, it was already an established startup. I think it was a late stage startup. And at the same time, I was started being an advisor to really early stage female founders. And I saw just the, by the time I think, and this is kind of going into what I do now, if you're a white dude, by the time you get to the point that you're running with an idea, much less starting a business, you know what you're talking about, inside and out, right? But I just started helping with, my background being a COO. I started helping with financial models, business plans, things like this. But I kept running up against this, these female founders, a fear a lot around the ownership of the business, the financial aspects of their company. But something really just called to me about, that's where I felt, here I am, I can help. And I had this experience with this woman that had, my first real experience doing this was, woman had, she wanted to start a sustainable clothing brand. And she had traveled through Guatemala, and she had met these nuns that were rescuing women from the sex trade. And she wanted to employ them for a sustainable living wage, making her sustainable clothing line. So she comes to me, and here I am, like fresh out of like 11 plus years in banking, like figuring out, like, do I want to work for this late stage startup? What do I want to do? And not female founded. And what do I want to do? And I was like, okay, well, this is a lot, like, but I would never have the courage, in a sense, to think that outside of the box. Right. And so I was like, let me go away for a couple of weeks. I was literally emailing nuns in Guatemala about their price points in their factory and how we would run this. And I came back with a very high level, but kind of a model of like, here's what it would need to look like from a price point, from a direct cost standpoint. Here's kind of your monthly overhead. And here's like milestones that we could look at. And I brought it to her. And she just started crying and said, how could you take my idea that didn't seem like it was anything? And what I realized was that it was about putting pen to paper, but it was about taking her seriously. And I think, long story short, to answer your question, is that where I really felt like I was being called, and my purpose was to stand up for, have a voice for, advocate for those, women in a financial and business sense, or anyone that's an underrepresented, business owner and founder, to take them seriously. And so I did get called back to the East Coast, to New York, and I held a regional role, a COO role for debt, equities, and prime brokerage. And I did that for about a year and a half. And then I just had this parallel path of continuing to advise underrepresented founders. And I know you've heard me say this before, but it was like, it was almost a surreal moment, because here I was working with these female founders that knew their businesses inside and out, but didn't have the confidence in it. But yet sitting with all these white dudes in boardrooms on Wall Street that seem to have all this confidence in the world. But I often was like, do they even know what they're talking about? And I was like, there's got to be something in the middle, right? There's got to be a set point in the middle. So that's why I left in January 2019 and started my own consulting business, Failing Advisory. I had no idea all I knew is I wanted to help. So I put a sign up on a cork board at a community group and was like, let me see if I can help you. So that's my backstory.
Which is incredible. And you and I have had this conversation multiple times around parallel paths, right? I'm coming from the banking world for so many years. And, when you talk about the confidence level, it's remarkable, right? And I've had this conversation with others. And no offense to men, because there's some great men and all of that, and very smart men, and I worked for a lot of them. But there's this storytelling aspect that they're really good at, right? A lot of it's like stories versus here's the facts, here's what we're going to do. Women tend to be really based on that fact, right? Like, here's the growth, here's the opportunity. So it's this convergence of, yes, taking all of this sort of accountability and what we're going to do, merging it with the story to tell and really sort of breed that confidence for women, right? Whether it's your business, you're running a business within a firm, your own sort of self advocacy. And that's where I see so much of what we're doing with Luminary, but also what you're doing at Failig. So you start Failig, you're like, I've got to go help and women, but you're really focused on the early stage companies that are like, I don't even know where I'm at yet. I've got to get from here to there. So talk a little bit about the kind of companies that you're focused on and what you're doing.
Exactly. So yeah, so I think that, I think it was a combination of, where can I put my skills, but also like, where's actually going to be making a difference? Where do people actually need this help, right? And so yeah, so I started out doing like fractional CFO work, and my mission was to get more women's businesses off the ground, and it requires money.
Yeah.
and that's my area of expertise, is kind of institutional investing, right? And knowing that space and knowing funding and knowing what that looks like. So I'm like, okay, I want to help women get funded, right? So I'm like, let me just boots on the ground. Running businesses at banks versus help running a startup is completely different. So I wanted to be part of funding rounds. So I had some success, like in the course of the first year doing this, went through pre-seed and seed rounds. But I also had some real wake-up calls that, guess what? Doing a discounted cash flow valuation for a pre-seed founder is not what you need.
Right.
And I had this time and time again of seeing that I would do the financial models, do the pitch decks, give them back. But I had instances where women would say to me, I still can't pitch.
Right.
Because that's your work, not mine.
Exactly.
And I would say back to them, no, I didn't come up with this idea. I couldn't have come up with this idea. I'm not the creative person here. But so I realized I'm not doing the justice, like doing a model. And I started to realize that because of what's really a systemic issue that's going on here, and what do I want to help solve, and what's the hurdle, is that, if there's a fear, if you're in an underrepresented group socioeconomically, if you don't feel empowered from a financial standpoint, there's a fear around the money. There's a fear around, which makes sense if you dig into it. We weren't allowed to have our own credit cards until like the 70s, like women I'm talking about, right? And so, but there's a big thing, I think, that like, I see underrepresented founders. I was seeing that they were like, just do my financials for me, like the outsourcing your financials.
Right.
Outsourcing, that doesn't do you justice. So that's when I was like, let me take a step back and see, not to say that you can't have help, but like, I was like, I can help more, right? Because I just kept seeing that, like, even with a perfect financial, a perfect pitch deck, that's not what's going to have you have a stable base, right? Because maybe it'll get you one round of funding, but then what? Right?
And so you've really got to know your numbers, right? Because you can't just rely on, you're not sitting there in front of the pitch. You're not sitting there in front of with them when the investor saying, yeah, let me answer those questions for you, right? I think that's also hugely important. And whether you're raising money from, a venture or angel or even a bank, going for a loan, you have to know your numbers. You have to know your business. You have to know your trajectory, when you're going to break, all of those things. And if you don't, it's sort of like, well, you just have an idea, right? And that doesn't give people comfort.
Absolutely. And that's a great point. It's a great segue. Thank you, Kate. So I saw fractional CFO, especially for these early stage founders, where I really see, we've got to move the needle, is that, I was like, in parallel, I became more of an active angel investor, and I was part of this group of these 50 women, called the Council Angels, and I just realized, me by myself, just doing, that's not what's going to help. But if we all come together and support and have a community, help build women up to the point where they can stand in their value, know their story, know where they've been, know where they're going, and go out there. I'm like, that's what we need to do. So I started, and also, it was very much influenced by, we were locked down last year. Black Lives Matter, what was going on in the world. And I saw that our angel group God bless the women that are Stanford GBS, white women that have gone to Y Combinator. But it was consistently the same women that knew how to pitch, knew exactly the order of slides, knew what the acronyms meant, and had the contacts. And I said, there's so many other people out there that have maybe even better, maybe they even have revenue so far.
Right, right.
And we've got to bring these two worlds together. And I think it was, I felt it was really my duty to, I was fortunate enough to be part of this investment group because of my background. And I saw this need to just have these real conversations and demystify what are these things? Because ultimately what it is to your point that you made earlier about storytelling, right? So the whole part of raising institutional capital, and it's really, when I say institutional, I mean beyond your friends and family, right? Exactly. When I call it stranger money. Anytime you're sitting across from someone that is evaluating whether or not to give you money, they're going to ask you questions about your value as a business.
Yep.
And that can feel disgusting. Someone is questioning your value, especially if you're but if you have a socioeconomically empowered position, meaning typically a white male, the way that they pitch, it'll go and say, my company's worth 10 million.
Right.
And typically a VC or an investor will say, okay, that's probably 7. But what happens is that if you're not, to your point, your very first point you made about data, and we're very, a female founder might go and say, I'm worth 5 million. Well, that's because she made 4 million last year.
Right. Right. Exactly. Right.
And the way an investor will say, oh, okay, well, 5 million, that means 3. So we have a double discount that's happening, right? And I think that, how do you solve that confidence gap in how, if it's socioeconomically, there's a lot, we got to have a community. Luminary is one of it. You got to have a community that comes around and builds up, right? And so for the incubator that we do, it's an 8-week program. We start with very simply, we have a week where we talk about what's your problem and what's your solution. Yeah. And we have an investor, Caroline Duffy, comes in. She's from a pre-seed fund. She is used to funding just based on ideas. We're not even talking about your traction yet. We're just talking about basic problem, solution, how you demonstrate product market fit. Then we go on to the next week, which is who's your customer, what's your customer persona, what's your target addressable market, and we have weekly readings. So the founders read about these concepts. I have a 20-minute video they watch, kind of demystifying stuff, and then they come and they chat in a small setting with, here's what I think my target market is. Right. As an investor, does that make sense to you? Right? Let me know. And so we're trying to build up, and it can be frustrating because I know that everyone wants to get money, right? So everyone wants to skip to week 8. Everyone wants to skip to how much money do I ask for and get me funded? But time and time again, it's there's a method to the madness. We've designed this checklist to successively build, and I see it every time that if you stick with it and know what problem you're solving, how does your solution solve that in the market? Who is your customer? On a unit basis, how does your business work? Take it step by step by step by step. By the time you get to the end, it's not like, oh, give me money. It's like, oh no, I know how much I'm worth.
Right. Now, how many, Molly? Again, I self-funded the business, right? For lots of reasons for Luminary, but I'm an advisor and I'm an investor in companies, all that great stuff, and my banking background. But there are going to be companies that think I've got to go raise money. I'm going to go raise money. I have an amazing. How do you also help those businesses, those women say, listen, you're not ready, or you can't go from A to D like that. There are other steps in the process because so many people, because of the media, by the way, I'm hugely vocal about that. It's sensationalizing, VC. Everyone's got to go raise money. And the reality is, even though women should be getting more and women of color even more, it's still a small percentage of companies that are ever going to be successful with VC money.
Thank you. Great second segue. So yes. So I'm a big proponent of VC dollars are meant for a very, very, very small fraction of the population. That being said, worth for damn more than 2% of women that get me dollars.
Totally agree.
So, exactly. So I don't want to discourage. But that being said, VC is a very specific model, and I have some stealthy things going on. So I'm very familiar with what it is to be a VC. But essentially, VCs get other people's money,
right,
and promise them massive returns. So when a VC looks at you and says, I don't think you're a VC investable, that has no bearing on how good your business is.
Right.
That just means you're probably not going to be $1 billion company.
Right.
And they've got to make you, because what happens with a VC portfolio is, let's say a VC goes and raises 10 million from investors. They've promised those investors they're going to turn that 10 into 50, 70, 100 million. Right? They've promised them that. And so the odds are, if you have a portfolio of 100 companies, at least 60 are going to fail.
Right.
So that means those 40 have to take off. And that's the whole premise behind VCs have a fiduciary responsibility. Yep. So that being said, we get this question all the time because majority of people, like you said, media, stars in their eyes, come and want to do VC. I firmly believe that regardless of where you're getting money from, it could be from a bank. It could be using your credit card. It could be doing revenue-based financing. It could be venture debt. I don't want you to take $1, and I don't want you to spend your money, your time, unless you take the role as number one investor of your business and you know exactly the potential of where you're going. How does what you're thinking about solve a problem? And where could it potentially go? And this is also why I created an incubator or one-to-many model. Because to be told, I used to charge $10,000 for doing a pitch deck, and I don't want you to spend that money.
Right.
I don't want you to spend money on branding, on marketing, 5K. I don't want you to spend money until you know the viability of your business, because ultimately you are the number one investor of your business. So you need to figure out what problem and solution, how many people are out there, how does your business work on a unit basis, how much money do you need, and what is your potential upside, because your returns and how big you could get is going to determine the best source of funding for you. And there's no value judgment. It's just essentially what is your business going to look like? And I think that's so important to know for oneself before you go out there and try and raise from anyone.
Yeah, there's a great article. There was a panel yesterday, South by Southwest, with Stephanie Mehta, the editor-in-chief of Fast Company and Inc., with Mark Cuban, and talking about raising money. And he was like, I mean, he and I are, hey, Mark, if you're listening, he and I are very much on the same page. Like, don't raise until you have to, until you know it's a good, all these things. If you just have an idea and you're like, I have to raise money because I have no skin in the game, it's a challenge, right? Unless, like you said, it can be, you think it's $1 billion company, but you've got to do the work. You can't just sit out there and say, I'm now going to raise. I have talked to so many founders. I'm like, well, how do you know you need to raise? Like, how much do you have to raise? Oh, I just know because I don't have any money. Well, you have to know how much you're going to raise, whether that's, again, whether you're going to go the VC route, whether you're going to go the bank route, right? And that's the other thing, like where you're focusing on a smaller percentage of the population, there's a bigger problem where women-owned businesses, 70% of them self-fund. We got to get them access to bank loans, right? And other institutional capital so that they can actually grow their business if they're not going to be $1 million company, right? So these worlds have to start converging, right? Because there have to be other ways. Now, I'm going to ask you another question. I know you're relatively, this is the incubator, you're running that, you've gone through a couple of cohorts. Do you foresee a certain percentage you're going to go through that and you're like, probably, stick with the smaller business, you're not there yet? And how do you deliver that message, right? Because you go back to confidence, it's hard to hear that, right? It's hard to hear that.
Yeah.
And it's just like a little bit of rejection, but it's not. It's like, how do you teach that, to accept that and keep building in a different way?
Yeah.
So how do you work with your founders?
Fantastic question. So one thing that I always say to founders if they're considering coming is that we are going to tell you it's not a fluff program. It's not. I think there's a lot of fluff programs out there that are great. that's not what I'm in the business of doing, right?
Yeah.
So that being said, about 50% of our founders, so we have 10 companies max per cohort, 50% of them end up not pitching a demo day for a variety of reasons. I've had, and I'm not gonna, name any names, but we have had an instance where a founder came in and the business model was just not right. Yeah. And we knew it, but it's hard to hear that.
Yeah.
If it's your baby, if it's what you put your heart and soul into, if it's what you think. And so we figured out a way, because everyone, in addition to having 4 hours of fireside chats with investors, pitch practice, everyone has a one-on-one mentor that are paired with them to have more of that. If you're getting this tough pitch feedback, you can you have an hour a week to talk to your mentor. And we ended up, finding different ways to like present the information. And I think what's been helpful is we have you get a weekly quantitative and qualitative feedback, right? And so it's a score objectively on a scale from 0 to 10 on the 7 different components of what you need to verify for your business. And it helps us give objective feedback. So if we're going week to week to week and you're not able to kind of move the needle, it's just something's not right with the puzzle piece. And we had one instance where we ended up delivering that message that we just didn't think this was a viable business. And it was the founder took a week off, right? She took a week off in the program, but she came back and she told us that she had gone and, canceled her meetings and all this stuff, but she had gone and told her mom that she had been given this message and that it's probably not the right thing to do. And her mom said, "Oh my God, I'm so glad that I've had this feeling, and I'm so glad that someone else was able to help you figure this out." And that's what we do. Not a lot of people will give you this information, and not a lot of people, even maybe family members. And so, but guess what? Now she's completely realized this has changed my life. I'm no longer spending time on things that are not the right thing to do. And to me, that's a success story. It's absolutely a success story.
Totally agree. I mean, 100%. And direct feedback, honest feedback, but also constructive feedback, right? That's how you survive in anything, whether you're working in corporate America, you're a teacher, you're a business owner. You need the feedback, right? And you also need that qualitative and quantitative feedback around what's working.
So it's objective, it's not personal, and we are literally there. So to that point, so half of our founders decide it's not right, whether or not they're completely pivoting or they need more time. Because once you go through the program, you're able to come back with future cohorts and pitch demo day. So what we've seen is that it's a mutual it's always a mutual decision. Yeah. We look at the feedback, we look at the ratings, and the founder, ultimately, we want them to come to the decision, what's the right path for you? And that being said, of the founders that have gone and pitched the Council Angels, which is made up of a bunch of VCs as well, VC representation, 40% of our founders have raised.
Wow, that's amazing.
This is compared to less than 2% of non-white dudes that raise, right? VC money. So it's working. It's working, and it is a community approach. It's a confidence approach, and it's getting to the heart of things. And we have, it's not easy, but what we do is that we're there for you. We're not going anywhere. We're there for you for the 8 weeks, and we're there for you after. And so,
yeah, I love it.
We're very excited about that.
And it's so aligned, right, with Luminary. That's why the day you walked into the space, like once we had reopened physically, I was like, Molly, yay. We've got 1 minute. So I have been throwing up in the screens a couple of ways to find you. So follow Molly at her.digital.incubator on Instagram. There's more on herdigitalincubator.com if you're interested, but even more at failingadvisory.com if you're just interested around some of the fractional CFO and just advisory services that you offer. Last question. New founder, somebody's thinking about raising, maybe they're just even in that ideation phase. What's your number one tip to them or advice as they start this journey?
Figure out what your potential is. figure out what you potentially could make out of this business, and get to really, really know. Start with the bottom, the ladder of proof. Start at the bottom. Google ladder of proof if you need to know what that is. What problem are you solving? And how many people have that problem? And it's not easy because it means talking to a lot of people and verifying your personal hypothesis. But you need to get that validation of your business idea is not just something you think is a good idea, but other people think is a good idea. Because if you don't know what potential you could possibly make, I don't want you to spend more of your time, your money on something if it's not going to be worth your time. Put on that investor hat.
Put on that investor hat. Put on that customer hat, right? Regardless of who the investor is, you need customers, and how you are differentiating your company yourself in the market. Great advice, Molly Fehlig. Thank you. I will likely see you next week at Luminary in the space. But thanks for being here. Thanks for the great things that you're doing and just sort of being a trailblazer and coming up with a solution for these early stage founders, which is where the majority of the challenges exist. So, so great to have you on Goaldigger, and have a great weekend. Everyone, thanks for tuning in. Have a great weekend. Please be safe, stay healthy, and wear a mask. Thanks, everybody. Have a great weekend.
Thank you. Bye. Thanks, Cate. Bye.